Well, the AI boom is showing no signs of slowing down, but most firms across Asia Pacific, Japan, and China are struggling to keep up.
The tech giant Cisco found that only 13% of organizations are fully prepared for the AI age after surveying more than 8,000 tech leaders for its latest AI readiness report.
Indeed, it highlights a divide between companies' growing AI ambitions and a lack in infrastructure needed to make them a reality.
Yeah, for more on the findings and what it means for business leaders, we're joined by Ben Dawson, a Senior Vice President and President for the Asia Pacific, Japan, and Greater China at Cisco. Thank you so much for joining us, Ben.
Great, thanks. Great to be here, Julie.
All right, let's start with that number. Only 13% of the companies in this region are truly AI ready. It sounds like a pretty low number to me.
Yeah, it is. It is. And maybe just give some context around the report and why that number is particularly instructive, I think, is this is now the third year in a row that we've been conducting the AI Readiness Index, which you touched on as a global survey of over 8,000 respondents. And it's really an attempt to get underneath the headlines and underneath the hype and see, are organisations truly ready to take advantage of all that AI can offer? And clearly, we're not as ready as we'd like to be, with only 13% of organisations saying they're in a full state of readiness. I think one positive is that this part of the world actually fares a little better. So across Southeast Asia, we see respondents about 16%. So they feel like they're ready.
Okay. Why are so many of them still struggling to get to that point?
What's the issue?
Yeah, I think there's a few things, and it's probably instructive actually to look at the organisations that are in that very ready category. What came through clearly in the report, there's a number of things they do very well. Firstly, they are integrating their AI strategy directly into their business strategy. It's part of the strategy. They have governance and change programs, and they're investing accordingly. 79% of those top organisations said they are investing more in AI.
Okay.
They're also focused on moving very quickly from proof of concept to production.
Okay.
And we see a lot of organisations stuck in that proof of concept trial phase.
Okay.
And measurement came through very strongly in this report as well, that organisations that do this well, at 95% of cases, they've worked out how to measure the impact on their business and track that. And I think in the absence of that, we're seeing some fragility in the business returns for others.
I mean, I'm still surprised by this finding in particular, because we're talking about, the Asia Pacific, Japan, and China.
Yes.
China in particular, we know, has given, the full state backing, if you like, to be an AI pace setter. So you could say the same of other developed countries as well, like Japan, if not actively doing it, seriously considering it alongside developed nations within the Asia Pacific. So why isn't this translating into a higher number for companies?
Yeah, it's interesting that the survey doesn't try to address the readiness of a given country or the economy. So it doesn't look at any country in totality. It was really a survey of business leaders within those countries. So I think there may be some countries that are creating more of that structure and perhaps more ready as an overall economy. But I do think what we saw is some of the emerging countries like Indonesia and Thailand fared much, much better. So 22% of organisations were in that highest state of readiness in Indonesia and 23%, 21% in Thailand. If you compare that with their European and Americas peers at 11 and 14% respectively, now that says to me that there's organisations in developing markets that see this as an opportunity to leapfrog perhaps their more developed peers. And it also would indicate that some of these markets are not dealing with the same level of perhaps tech debt that we're seeing in some of the larger organisations.
Okay.
And also this report highlights AI infrastructure debt as a growing risk.
Yes.
And for Asia Pacific, where digital maturity varies among different countries, how, industries and countries can actually collaborate to solve that problem?
Yeah, I think solving aspects of or embracing AI fully is definitely going to require a collegiate approach between technology companies, industry and government in many areas. And that talks to how we create the right regulatory frameworks. And probably the most critical area we're focused on and we see as an inhibitor is we have to get security right. As we work with organisations to build the AI infrastructure, the ones that do it well are looking at cybersecurity as an inherent foundational element of that that infrastructure.
Right.
And that requires getting the right policies in place from government, getting the right level of investment, and getting the right technology.
Okay, Ben. So for companies that are eager to move fast with AI, what sort of advice would you give them when they're trying to make that leap? And you talked about security, but beyond security, is there other tips that they can pursue without disrupting their core business and operations, and also managing that fear that AI could take over jobs?
Yeah, it's a good one.
And the world.
Yes. There's no absence of ambition in this.
Yep.
So 83% of respondents said they intend to deploy AI agents, and 38% of those said they will have AI agents supporting human workers in the next 12 months. So the ambition is there. But what we saw, the organisations that are moving well and are in that highest state of readiness, it comes back to looking at AI not as an adjunct to the business, but as a core part of the business strategy, investing appropriately, having the right policy and governance in place, and viewing trust as an integral part of the value. And that's getting security embedded into the infrastructure is a critical piece of it.
Ben, why have you decided to do a double-blind survey? I mean, wouldn't it make sense, to have an understanding of which sector is doing well and other companies or other sectors which aren't doing so well then can go to these, other companies who are doing well and kind of get started as well?
Yeah, it's a fair question. And we approach it as a double-blind survey, so we don't know who the respondents are. They don't know who's asking the questions or who's commissioning the report. We feel that's important to get integrity. But we do see this being a multi-year process, so getting some consistency. Despite that, we do get some insights around different markets and different industries. As an example, in this report, it was clear that those industries that have continued to invest in digital infrastructure on an ongoing basis are much better placed. The two that stand out are the technology sector and finance, the finance industry, because they're not laden with the same level of technology debt because there's just ongoing good business practice. They've been continuing to invest in digital infrastructure to support that infrastructure on an ongoing basis.
Okay, I presume you get far more accurate and honest answers when it's a double-blind survey as well.
Yes, we'd like to think so. And it's not then coloured through a Cisco lens.
Understood. Yeah. Okay.
All right, Ben. Thank you so much indeed for joining us this morning. Ben Dawson, SVP and President, Asia Pacific, Japan, and Greater China of Cisco.